Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, Chief Technical Analyst with Sticky Trades. Before we get into the chart analysis, let me first point out, especially to our new subscribers, that I follow a 7-point trading checklist. I've developed this for our members over the years. And so if you would like a copy of this, just go to stickytrades.com. You could set up a free membership, no need to put in a credit card or anything like that. And then you could download the 7-point trading checklist from our website. Again, no money needed, no credit card, nothing. All you have to do is register for free, and this will go out to you on your member page. Now, as we are closing up this week, I just want to talk a little bit about gold. Gold is on record highs, and I'm going to talk a little bit about gold and silver at the very end. But this is very interesting. Costco reported that selling as much as $200 million in gold bars each month. This is according to Wells Fargo. And so while the demand for gold is continuing to go higher, the supply is actually depleting. And as a result of the shortened supply, of course, if you've taken any economic courses, supply and demand is what makes the world go around. Less supply, more demand, less supply. Prices are going up, but I do believe we're hitting some resistance on the technical charts. Again, I'll get back to that in a moment. Here, we were talking about the yield curve and how investors are focused on inflation. And while the Fed continues to talk about cutting rates, the bond market is saying, whoa, hold on now. The tail, now I talked about this a couple of months ago. For those of you that don't follow the bond market, I refer to the tail. What this basically is in a nutshell is that when there is less demand or less buyers in the bond market, the interest rates go up and the price for the bond goes down. And so the tail represents a lack of buyers coming into the bond market. And so this is telling us that interest rates could still stay higher for longer, and there might even be a possibility that rates go up from here. Now, as we're coming into the close, looking at the diamonds here is a little bit of a bounce towards the close in the final minutes. We're actually under the 2-minute mark right now, 1.5 minutes to be exact. And you can see that we're hitting some intraday resistance. Looking at IWM minute by minute, you can see that we've been pressing the lows throughout the day. And this little blip here, this little short covering rally, as I would refer to it, or the shorts covering in the final 15 minutes or so of the day. That's IWM. If you look at the QQQ, which is the tech sector, we've been pressing the lows for most of the day here. And finally, if we look at SPY, there you go. Just a little bit of a bounce towards the end of the day. And that is what we're looking at. Now, I'm going to go right back to the daily charts here as we're coming into the final seconds now of the trading session and start right from the beginning. Diamonds have taken a beating this week. And you can see that we came very close to hitting my upside target, but we eventually hit my target from a couple of weeks ago right there. And so the volume is increasing on the way down. So coming into next week, I do believe we're going to go a little bit lower on the day, and that's going to be Monday or Tuesday. And then once we see a drop in volume, then I'll probably come back to give you an upside target on a possible bounce. And if you look right now, the bell is ringing, and that is the close for Friday, April 12th. And so going back to the oscillators, you can see that the CCI and the stochastic are still heading lower. We do not have any hinges there. So my short-term target for the Dow is 378.19. Moving right along to IWM, we've got the same thing. We did hit my downside target here. That's why I left it in place. We're now on our way to hitting that target at 197.41. I am not moving that. That's going to be the target for next week. And look down below. The CCI started to head up, and then guess what? Put on the brakes and did an about face. So the momentum is now shifting on the small cap, or the Russell 2000. That's the ETF here, is IWM. And so I still think a little bit lower Monday and Tuesday. And then by Wednesday, I'll have a midweek report for you to determine whether or not we've hit support and whether or not we could see higher prices on a possible bounce. Going back to the Qs, you can see here that we did close below that 20-period moving average. Yesterday, we did hit my upside target from last week's report. Now, where are we going? I have my downside target set and maintaining at the level of 429.91 with an increase in volume and oscillators still moving lower. So this is turning out to be a very interesting market as prices are failing to get back up over that 20-period moving average. This is a pivot point lower today. We have a lower high, lower low. In the world of technical analysis, that's something you must pay attention to. Both the pivot to the downside and pivots to the upside are what traders rely on. Moving on to the S&P 500, we had the upside target hit here. We're on our way down to go to 498.67. Take a look at that 20-period moving average right there. We are now curving lower. See, that's starting to head lower. That 20-period moving average right now is going to act as resistance as it turns lower. So you can see here that I'm putting a little R representing resistance. When support is broken, like it did here, support turns to resistance. That's the same thing that happens on a horizontal role reversal. That's what we talked about 2 weeks ago. Go back and look at the archives and you can see that I gave you a quick lesson on what role reversal looks like. And then last week we talked about how to trade the gaps. This week I'm going to be talking about bullish and bearish engulfing candles. And as soon as I get done with the VIX, we're going to get right into that lesson. My goal here is to provide value for our subscribers, especially the new subscribers. If I can give you a little bit of a 3-minute lesson on what these signals look like, you'll become a better trader. And as a result, you'll become a better technician from looking at the repetition here. So I'm keeping that downside target right there at 498.67. And that takes us to the VIX. Well, lo and behold, what happened? That green dotted line was my longer term upside target at 1811. We hit that. And now we see this very long shadow. The challenge with this particular candle is that not only is it showing a long shadow that closely resembles what we saw back here in a long shadow candle, but we are also showing a bullish engulfing candle on that VIX. So I'm going to keep the slight downside target here of 1463. But again, that's going to be very brief. I think we could see that right on Monday, and then I think we're going to move right back up on the VIX. And I'll report back on that on Wednesday. All right, let's get right into our lesson about bullish and bearish engulfing candles, starting with a bullish engulfing candle. What is that? Well, my view of a bullish engulfing candle might be slightly different than what you may have seen on the internet in different recordings and such. I look at these candles body to body, right? So I'm not putting any shadows here. I'm not putting any vertical lines above or below the candle. I'm just matching body to body. A bullish engulfing candle is when the green body engulfs, or you could even say eclipses, being that we had an eclipse recently, it eclipses the previous red body. We call that a bullish engulfing. Now, this, as I've measured it over 40 years of experience here, I see this as 80% bullish. Now, that doesn't give you a guarantee prices are going higher, but it gives you a good, strong indication that 80% probability is what we'll see in higher prices after you see an engulfing candle like that. All right, so that's a bullish engulfing. What is a bearish engulfing? Well, it's just the opposite, except the red candle is now engulfing the green candle. That too gives us an 80% probability that prices will drop after you see a candle like that. Now, there are different variations of this. Obviously, you're going to see different lengths of the bodies and shadows, and you throw that all in there. However, when you see a green candle such as this, engulfing not one or two or possibly three, the more candles that are engulfed, the stronger the signal is to the upside on a bullish engulfing. The opposite is true if you see a bearish candle that is engulfing 2 or possibly 3 candles from the past 3 days, then that gives us more insight and more pressure to the downside. And you could see that most of the time we'll see engulfing candles like this, and sometimes you see very small body candles but still engulfing one another. Then that too is a variation of what we have seen. Now let's go back and look at the Dow. I'm going to go back and look at the Dow, and I'm going to point out these bullish and bearish engulfing candles for you. Okay, so if we look right here, you could see a bearish engulfing candle. It took a little while, but the price dropped after that. Right at the very top here, look what we see, a bearish engulfing candle. You see that? What happened? The price dropped, it bounced a little bit, and then what happened? It took the hard turn lower. And that's just with DIA. If you look at silver, now I'm going to point silver out to you. I said I would look at silver and gold. If you look at what happened today, we had a massive bearish engulfing candle. You see that? Now what this means is that in the morning, silver gapped higher. The opening is at the top of this rectangle. The close from yesterday is at the top of that green candle. So there was a slight gap that occurred this morning. And what happened? The price came right down, filled the gap, and continued to go lower. So that is 80% bearish, meaning that there's 80% chance prices are going to drop from here. Now, I'm out of my silver position by 25%. I'm going to talk a little bit more about this in the midweek report, but I took the cash and I got into another stock, SVRA, which I've been talking about quite a bit. So my cash is still working in the market, but I'm position trading. I'm waiting for silver to drop. I will be buying back all of my silver and possibly selling out of my SVRA position at a profit to give me more buying power. Don't want to go too far down the road with that. But when you see a bearish engulfing candle coupled with a gap below the market, remember we talked about that last week, how to trade gaps, you have an 80% chance that the gap will fill. And now you team that up with an 80% chance of the bearish engulfing candle moving lower. You got the bearish engulfing pushing it down. You got the gap below the market pulling it down. So you got a high probability that silver will drop from these levels. If we look at gold, not quite sure if it closed with a bearish engulfing. I was looking at that on the close. No, it did not, but it came very close. You could see that on the close we rallied a little bit, so this would not be considered a bearish engulfing candle. The candle would have had to close beneath the opening from the previous day. So it would have had to look like this and had this all shaded in red. So it completely engulfs the green candle. It's pretty close, but it's not classified as a bearish engulfing. I would still consider that to be a bearish candle. On gold, there are gaps below the market that can help draw it down. You have this wide divergence from the moving average that will most likely cause the rubber band effect to take place and pull it back. And that is what we're looking at. Now, with regard to our page on YouTube, again, thank you so much. We blew through the 10,000 subscriber mark. We're already on our way to pulling in 11,000 subscribers. And remember, we just started this channel in July. So thank you all for sharing and liking and commenting on the page. If you have any questions whatsoever on the topics that I've discussed over the last 2 weeks, whether it be role reversal, gap trading, or like we talked about today, bullish and bearish engulfing candles, write your question in the comments page and I will do my best to answer that question as quickly as possible. Thank you so much. Please like and subscribe and continue to comment. And by all means, feel free to share on your social media pages. Again, it helps us with building that algorithm and getting more subscribers and more eyes on the videos. With that, have a great weekend. So long.